Happy talking, happy talk. Talk about things you like to do. Well, I like to do things on the chart. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. And yesterday I showed a push strategy. It was just an idea, it's a framework. And there's various different ways that you can use a framework. And today I'm going to show you another one, which is kind of using the Ichimoku cloud. Now, when you're trading, most people just seem to think it is a rigid system. It's not that simple. What you need is a framework. Take the push, for example, yesterday. I came down the time frames because I wanted something on a 5-minute chart. But because it came down, I increased some of the boundaries. In other words, the directional moving average. Moved it up to a 50. Now, depending on your tolerance, you can test it. Some people like an 89, some people like a 21, all that sort of thing. And I guess what I'm driving at is, once you've found something that you're comfortable with, you kind of stick to it. And I'll show you different things that you can use to adapt. And that's the key point. Because the markets are fluid, they are living, breathing things. That means you have to be fluid as well. Okay. Now, the first thing I do every morning is I work the strengths out, and I pay a lot of attention to picking the market that I'm going to trade. Then I'll apply the tool to the market, not the other way around. See, when I speak to people, they sort of think, right, I've got my tool, I can apply it to anything. It's not quite that simple. I think that's where maybe a lot of people go wrong. And hopefully in this journey we can help you. So that sounds good. Subscribe, share, like, do all the good stuff. And we'll see this little channel grow together. And in the process, maybe show you something as well. So let's pull the screens up and let's have a look. See what the big fella's banging on about today. So I'm looking at pound JPY, and the first thing that I do is this. Okay, I'll just show you. I make this strength sheet up every day. All right, and today I'm looking at day trades. There's no day trades up in this one. These are just swings, and the way this works is it's a filter. That's all it is. Nothing to do with direction or anything like that. It's just a filter telling me there's movement. Now, if there's nothing of any interest up in this section, I will drop to these crosses, because these are the world drivers and they will always move just because of the volumes involved in the currencies. So what I'm looking at is the strongest of these four, which is the pound. So I am pitching the pound against one of the other currencies. Okay. Now, I was trading euro pound earlier today, and that move is now sort of done with. So I'm looking for something else, and the idea is just to show you something. So it is the pound versus the yen. But why is that? It's because these are poles apart up here. Okay. Now, the first move was based off that. It was done on my 5% account. I'll show you it at the end. Pound is strong, euro is weak there, so that was good. I've got my first stages going. But when I'm looking at the change of strength, just to get an idea of what's going on, you've got the yen at the top, and I've got the pound at the bottom, which is kind of pulling this out. All right, and you can see the rate of change there. It's quite substantial. So those were the markets that I was kind of looking at today. All right, so I'll just move that out and let's have a look at it. Now, if I just pull this out to the hourly, just so you can see it. Strong drives up, bit of consolidation, it is selling down, but it is a general move to the upside of sorts. Now that's on a naked chart. And talking of things naked.
What's that look for? Naked.
You dirty old man.
You haven't put your clothes on.
You put your clothes on.
I've got them on.
Sorry. It's my favourite toy. Oh dear. If you ever spent a day in here, it's quite embarrassing at times. Our children go mental. You know, they are very ashamed of us when we go out.
You are the most immature man I've ever met.
You're better not.
Yes, you are.
Not.
Oh, God, give me strength.
But, hey ho. They used to show us up when they were little. We're just getting our own back. Anyway, what was I saying? I'm looking at a 5-minute chart for you guys. And why? It seems to be the chart of choice for everybody. And for me, I find it alright for entry. But for gauging a trade, I prefer to use higher up. But what I will say is, if you are using small time frames, 5 minute, even the 1 minute for example, just be careful. You know, a lot of it will bounce around. So pay close attention to the ATR and target accordingly. Okay. So let's have a little look while we build this up. What can we possibly get out of this today? Right. So this does. Well, if I sort of look at it from there, about 8 ticks. So we can target between 5 and 8 ticks for today. Okay. So let's have a little look. So, a nice level here to pull back into. Now remember, this is just a very thin line, so it's not uncommon for something to bounce around it, as you can see there, and then it makes its move out the way. And steady. There we go. If we just crunch that up for you, you can see a steady up move, and this is a pullback. All right. Now we need to see whether this is going to hold. So how do we do that? Well, let's put on an itchy Magoo cloud. Now, the normal settings for this, if I switch everything on, is this. That is about as mad as it gets. It is horrendous. You know, it's like, whoa, what's going on here? You know, my eyes. Well, we're going to strip most of this out. Okay. So let's have a look. So we'll get rid of that. We'll get rid of that. Get rid of that. And what we're left with is the cloud itself. All right. Now this is going to give us a little bit of a barometer. All right. And what do I mean by that? Well, it's actually showing you some dynamic support and resistance, which is this bit here. But it also gives you an idea of what's going to happen in the future here. I'll move that down. See if I can widen that out for you. There it is there. That's what's called a Kumo twist. And it means the transfer from red into green. And it's what it's symbolizing is strength in the market. If it's green like this, it means it's pushing to the long side. If it's red, it's to the downside. And this is worked out by some strange mathematical equation of the waves. All right. So this is telling us that in the near future, this is going to push down. So for all we've seen this come up and come back down into this level, this is telling us that the pressure is going to stay to the downside, even though on this 5-minute chart it looked like it is moving up. Right, okay. So there it is there. It's getting a bit stronger. let us put on a moving average. Okay, now we're going to move, just take that 50 off, and we're going to put it 8 on, just like so. Right, we've now got 3 bits of information telling us this is going down. 1, it's underneath the level, and it's underneath the moving average. So can we assume this is going down? Yeah, we can. So we're going to put an order in just underneath that to let it come to us. We are going to go for 6 pips. Fire. Just like so. Just change that over. And then we'll just crunch that up. Okay. That is it. This is about as simplistic a trade as you can get. Okay. And why? Why enter at this point? Well, why not? You have a break of the cloud. It has stayed under the cloud. That has now passed over the cloud, this bit. That is telling you it is down, and you've just used the ATR to get you a 5 or 6 pip target. All built up off a 5-minute chart. Now this is quite a simplistic way of looking at the market. And there's another little element to it, which is that push. Okay? Because you could assume that that may continue. And that's it. Simple. But let's find out, see if it's going to pay off. That's that, guys. All done. So let's have a little look. There you go. 30 quid. How, why, and was it worth it? Well, let us explore, shall we? Bear with me a tick. Okay. The idea of what I'm showing you here. Again, don't take it as gospel. Nothing in trading is gospel, and I guess that's why I get myself a bit uptight sometimes when I see various adverts and one thing and another, because I've been around long enough to know it's just the world doesn't work like that. And then also you have the gullible believe these adverts, just think you click a couple of buttons and that's it, you make money. It's not that simple at all. As I said at the start of this, I pay close attention to picking the market. Then I apply the tool to the job, not the other way around. Okay? So if you can find a market that is moving and looks to be in a reasonable direction, then that's your starting point. Then it's just a part of looking to piece this together. And the pieces that we used today was a standard Ichimoku cloud, and we looked at a couple of pieces of information. The twist was telling you it was to the downside here. We have a level here, which is a strong level. Okay, it's being represented through, I'll just pull this out just so you can see it daily. You can see there, being respected a few times here, here, here on the daily. So we know it's a strong level. All right, so that's your second piece of information. All right, so that's 1, 2. We also popped on a moving average. Okay, now the moving average contains the price. If the price, we are looking to go short because we're under this level, that's telling you to go short. and we're also on the underside of the cloud. So that's another piece of information. Okay, and then obviously the cloud itself, the price is underneath, another piece of information. How did we target it? I just used an ATR. It's a 5-minute chart. You know, 5-minute charts, they just bounce up and down all the time. So do I want to outstay my welcome? Of course I don't. I just want to get in, want to get out. All right. But also I just wanted to show you in reasonable quick terms that you can get some money out of this. Now, that's made 30 quid in, I don't know, maybe it's 20 minutes. Now, if I do that twice a day, it all adds up. And that's all trading is. It's just a couple of trades a day, load it up, get paid, and be happy. Very, very simple. Now, earlier on, we're looking at some trades. Let's have a look. There we go. Just pull that across for you. It's a window of the world of things that I trade regular. And there you go. Euro JP. And it's paid me. So quite happy. And I'm just using pennies. And it's building up nicely throughout the day. Do that a few times a day. You get 60, 70 quid a day out of that. And that's it really. So there we go. The idea of this was just to show you that it can be done.
Good job.
So I hope that made sense. Trying to genuinely make these videos bite-sized in the sense that they're easy to swallow and not too difficult to understand. Reason being, trading ain't that difficult once you get your head round it. But it's like any other job. You need to learn it. And you're not going to be a millionaire just by pressing a couple of buttons. You really need to study and enjoy your craft. And I emphasize enjoy. Because trading is the most frustrating career path you will ever have. You will go through high and low emotion more than any other job. It's just the nature of what it is. So keep your comments going. I'm always interested in them and I genuinely respond to every one of them. And who knows? Hopefully you might have been inspired. So trade well, keep that risk managed, but above all, do what you love and the money will follow. See you all in the next one.